I decided to make this YouTube video because I find these 5 questions I got asked a lot. Buying insurance is a little bit like buying cars. All cars had 4 wheels. Look at this one, you can look at this one, you can look at this one, you can look at this one, look at this one. Which one is the best? Depends on your lifestyle. What are you using this car for? So same thing to insurance. You can decide on how long do I want this insurance for? What is my insurance needs? For example, usually Canada Life, London Life, they are stronger in whole life policy. Universal Life, usually Sun Life and Manulife, they are very good. And then term insurance, RBC, tend to be cost effective. These things add together, then you decide on the product first and choose the company second. Canada Life and RBC tend to be cheaper. Typically Sun Life tend to be on the more expensive side. Since 2017, all companies use the same mortality table, so you are not going to see huge difference. Term insurance is really just for temporary needs, so if you compare the price, you will find they are all very, very close. Only a few bucks difference a month is not a big difference. But I will tell you is the difference is really for the future convertibility, because term insurance in the future, when your needs change, you can convert to a different product. They design differently. Manulife usually only convert to a longer term insurance, whereas Canada Life, Sun Life, their term insurance can convert to a whole life product or universal life product without medical underwriting. The most common one for young family is called debt elimination and future income replacement approach. The easiest way to calculate is mortgage balance plus the family expense a year times the number of years you need to replace, and then subtract your group insurance, subtract your saving. That is typically the number of your insurance needs. People who have $50,000 income a year, typically they will be walking around with $1 million of insurance. For clients who are a little bit more mature, for example 45 or 50 and over, we have to start to use another approach to double check. This is called the estate preservation approach. As a client is growing older, they continue to accumulate assets. When our client pass away, they will have to pay a final bill. And that usually is quite staggering. Basically, when someone dies, their assets are deemed disposition. Basically, they treat it as they sell everything at once before they pass to the next generation. And that will trigger the tax. And that's why we use insurance to calculate how much tax are we looking to offset. Critical illness is very, very close to my heart. If there's opportunity, I would love to make a separate video just for critical illness. Nowadays, we are living in a different world. In the past, when our parents got sick or they got injured, quite often they will die because the medical technology wasn't very advanced back then. But now we live. If we suffer cancer, if we suffer stroke or heart attack, quite often is that, in most cases, we will survive for some time. And that's why critical illness is an important part of living benefit. 2008, it was $6 million a year paid out. So $6 million paid to the policy owner in Canada. But now look at 2018. It was almost $24 million. So in just 10 short years, it's 4 times. So that's telling me there's more and more people, they are benefiting from this insurance product. It is not about making a profit of your children's disease. It is making the resources available when the parents are confronted with their worst nightmare. You see, when our children are sick, it's a very financially crippling experience. We have to take time off work, leave without pay. We are covered by provincial health insurance. That is only to cover most of our medical bill. Critical illness actually in a lot of cases is to replace our income. Fortunately, CI policy for children is very inexpensive, but is financially impactful. Like $50,000 coverage, that is only about $12–14 a month. If you take a bigger plan like $100,000 coverage, it's only about $24 or so. So this is the first time I make video. I'm nervous, but this is the start. If you have any question about the insurance or about anything else, please write a comment below, and I will be happy to answer them in the next video. If you like it, please press like, subscribe, or share. Until next time.